All right, what is up, traders? What's up, tycoons? Super excited for today's video. Gonna give you guys an update on TLT. We're gonna go over some of the chart patterns, and we're also gonna take a look at a lot of these treasury yields. Okay, Silicon Valley Bank, as I'm sure you've already heard, as well as Silvergate. These banks are collapsing right now. And so what's happening is the Fed officially announced that they're going to bail them out, which there's a really, really big debate around that right now currently of, whether some of these people should be, held accountable, right? And they have millions of dollars and only 250,000 supposedly is supposed to be insured. And now they're going past that $250,000 limit and just bailing them out essentially. Right now, it's not so much a bank bailout as the bank is still collapsed, but rather depositors are going to get their money back. Now, this opens up a lot of fear and could be the beginning of the, very similar '08 financial crisis that we had. We could be in the very early stages of something similar to that. So definitely keep an eye out for that. Definitely be wary and be mindful. Now, with that being said, this is causing a lot of the short-term treasury yields to actually plummet. And, the last time I did a TLT video, it was about an 80% chance that they were pricing in the Fed funds rate to be about 50 basis points. And now that's actually dropped back down due to, the economy and the bank runs and different things like that. We also had CPI come in at expectations today. So we're seeing the stock market rally a little bit as a result. With that being said, it's time to jump into the charts. We're going to head on over to TradingView now and break things down for you guys nice and simply and show you guys what I mean. So I actually did a video here recently titled, "Will the Treasury Yields Cause TLT, Bitcoin, and the stock market to rally?" Right? Now, a few of those things rallied except for ultimately the stock market, right? The stock market continued to go down, but we'll get into the treasury yields real quick, but this is TLT right now, and there's been many, many signals for TLT and really this bullish rally. Okay, I got into call options here when we had the abandoned baby chart pattern. We had three bullish setups, guys. We had a double bottom indicated by these two arrows, okay? Then we had the abandoned baby chart pattern, and we also had bullish divergence. Take a look how we have a low here and then a lower low on the price of the stock, but we actually got a low and a higher low on the relative strength index. So we had three bullish signals there. We had some question marks around what the MACD was going to do right here. We weren't sure if it was going to curl up and give us an entry signal, or if it was going to curl back down and give us, another exit signal, or just continue the bearishness. And you can see that was actually the fourth indicator, and it actually crossed up, right? So the MACD has been very, very useful for spotting potential entries and exits. All right. If you take a look over here, we have the red line crossed below the blue line. That's an exit signal. And then we also had multiple signals up here as well. We had a double top indicated by the two arrows. We had a rising wedge. So similar to over here where we had a double bottom, and then we had a chart pattern known as the abandoned baby. Here we had a double top, and then we also had a rising wedge, and then we got that MACD sell signal, and you can see we had a big flush to the downside. All right. And over here, the MACD also worked again as an entry signal, right, to ride this wave up. Over here, it worked as an exit signal to ride this move down. So the MACD has been pretty useful, especially on the daily chart when it comes to TLT. If you're not using that, I definitely recommend trying to use that. It could be something to really help give you guys an edge. Now, we're actually going to go to the weekly charts real quick. And the reason being is I want to show you guys what I was looking at on the treasury yields and what kind of made me think that we could see bonds start to rally. All right. And price action always precedes news. So when I made that video, the whole news with Silicon Valley Bank wasn't even out yet. But this is the 2-year treasury yield. Okay. And we have this bearish divergence. Let me make it a little bit cleaner for you guys so you can see. We'll make this MACD a little bit smaller. All right. And take a look right over here. And so you can see that we're creating a series of higher highs, right? We're making highs, higher highs, higher highs. All right, we're definitely in an uptrend on the treasury yields, but look at your relative strength index. We had highs here, lower highs here. That's a bearish divergence, right? And we also have this little bit of a horizontal head and shoulders right here, and we just broke this major trend line. Okay, we got a clean textbook break, retest of the trend line, and then push back lower. So TLT is down today. We are seeing treasury yields start to go back up, But this is something that we were looking at whenever we dropped that video. Now, this is across multiple charts, okay? Not just the 2-year treasury yield. We can go to the 3-year, okay, and take a look at the 3-year treasury yield, and we see the same thing, right? We see that we had this big trend line here, okay? We actually dipped down below it, all right? And that's when TLT and a lot of the bond market was really raging and going up. Things have started to pull back, as I mentioned. But we had that same kind of setup here, guys, where we have a left shoulder, we have a head, we have a right shoulder forming right now, and we could potentially get these to play out. So you have to keep in mind all of the scenarios, right? I know a lot of times I talk about pricing in somewhere around $80 to $90 on TLT, but that's just one of the structures that I'm tracking, guys. I'm not tracking only just that. I have to basically call an audible sometimes, right? Trading a lot of times can be very similar to football. In fact, where you have your game plan, okay, and you have to be Peyton Manning sometimes, right? If you can read the defense and you can see a setup, you call an audible and adjust to that, so that way you can make a successful play and hopefully get a touchdown. Maybe sometimes you even hit those Hail Marys and make some really big profits, okay? So here we have the bearish divergence as well on the 3-year treasury. All right, if we take a look at the 5-year as well, we have the same thing. Okay, let's zoom in on that real quick. Sorry, I keep typing O. It's supposed to be 0. All right, 5-year treasury, same exact thing, guys. Okay, we had the bearish divergence setting up there. We can look at the 10-year. The 10-year had bearish divergence on the weekly chart. Why does it keep doing this? Here we go. 10-year treasury, bearish divergence. Okay, lower highs while we're making higher highs. As well as the 20-year even had the same. I don't think the 20-year really had bearish divergence, but it does have the very similar setup, right? Where it's kind of putting in a head and shoulders right now. And then it's also testing this major trend line right now. And the 20-year treasury yield is actually still currently below this trend line right here. So it's going to be really interesting to see what happens. On top of inflation coming in at expectations today, I mentioned, the bailouts, and a lot of these bailouts with the banks is causing people to be like, hey, and the Fed be like, hey, maybe we need to pause, okay? And so the market is pricing in a potential pause even sooner than what it was just a couple weeks ago, right? The market is pretty much changing and going on a everlasting roller coaster, right? In January, they were pricing in rate cuts, okay? Then in February, inflation data came out for January. The January inflation data was hot. And then we saw they started pricing in 50 basis points. And now we're in March. We're seeing the economy collapsing. We're seeing bank runs happening. We're seeing banks collapsing. And now they're pricing back in a rate cut here soon again as well. So, tread very lightly. Be smart. This may even be a good time to sit out in the market. It's changing its mind constantly right now. And that can be very confusing for some people. So if you're not sure what plays to take, you don't have to take any plays, guys. You don't have to force a trade. Now, if you want to, hop into the Discord, okay, the Options Trading Tycoons Discord, I'm trading TLT. We're trading NVIDIA, SPX. We're trading the S&P 500. We're trading lots of stuff in here, guys. Today, I had an 18% day trade on TLT calls, okay. I actually bought the dip this morning. Was able to sell out of those. Yesterday had SPY call options, sold those real quick for like 15-20%. We got lots and lots of plays, guys, right? So if you want to join the Discord, just yesterday I had a 30% play on TLT. And you can see there's lots of orders here, on TLT, on the S&P 500, many plays. We hit 100% plus on a lot of plays. It's not uncommon to really see that. Typically, we get about one at least a week that's 100% or more. So if you want to join, be a part of our trading community, the link is in the description below. If you use code Zachly, like the channel name ZachlyTrades, you can get a little discount on your membership to join the Discord. So enough of that. We're going to hop back over to TLT, all right, and kind of break down what it is that I'm looking at right now, all right, and, some of the key levels that I'm watching. So I mentioned that bearish structure, okay, and this is that 1, 2, 3, 4, 5 down, all right, taking us to that $81 to $87 region. But if you look, we followed the structure very cleanly for about the past year, and we've been breaking that structure, right? So, you know, your wave 1, your wave 3, and your wave 5, those are supposed to be 5-wave impulsive moves to the downside. And so, you know, here we had a 1, 2, 3, 4, 5, and then that ended our wave 1 after that 5-wave impulsive move. We got an ABC correction. Your wave 2 and your wave 4 are supposed to be ABC corrections, right? And so that's how you kind of help validate that the structure is valid and that it's still following the structure. And it did a really good job of following the structure. Right after we got our ABC correction, we did our next 1, 2, 3, 4, 5 down. And then we got another ABC correction after putting in the bottom for our wave C, our wave 3 of the larger structure. We put in another ABC, and we got our wave 1 and 2 here. But notice how we've just consolidated sideways now. And so there's different ways to spot a reversal. One of my favorite ways to spot trend continuation versus trend reversals is to use the Fibonacci's, right? So you have the 61.8%, the 50%, and the 38.2% levels. These are the 3 most common and well-respected retracement levels using the fibs. There are other levels that you can use, but these are the ones that I like to use and that are the most common and well respected. And you use them because nothing goes in a straight line down or in a straight line up. So, you know, if you move down, retrace, and then continue the trend, right, and continue heading lower, that's how you can spot trend continuation. And that's what we've been getting so far, right? We're moving down, retrace up to the 38.2, continue the trend, right? And then we retrace up to the 50%, continue the trend. And here we retraced up to the 61.8% level, and then we started to try to continue that downtrend. We got our wave 2 up, and then we haven't really had that strong wave 3 down to really validate the end of our 5-wave structure here. Instead, we're actually consolidating, right? So we're moving down, retracing, and we're consolidating sideways now. That's potentially how you spot a reversal, okay? So if you move down, retrace, and then consolidate and break through those retracement levels, that's how you can spot an upside reversal. So there is a chance that all of this was just a bounce off of the double bottom, off of the abandoned baby, off of the bullish divergence, and this is just a healthy bounce and healthy consolidation to ultimately continue the downtrend. Or we have to keep in mind, and really the level that I'm going to be watching is right over here around 109.69. If we end up breaking, all right, and retesting that as support and we can continue higher, then overall this bearish 5-wave structure may be invalidated, and it may be time to start a new count and possibly even a bullish count up when it comes to TLT. So we'll see what happens. You know, for now, as I mentioned, lots of consolidation, lots of trading sideways. You know, I hopped in puts here yesterday because you can see that this is a little bit of a, you know, we're basically trading in this range. Let me zoom in a little bit more. All right. And so it's given us some really nice levels to be able to trade off of. All right. And this is how I was able to get 30% on some TLT puts is I'll show you guys the range here. But, you know, we're coming out and we're topping out in this little bit of a range right here. This is a little bit of an overhead supply zone in this area right now that we haven't been able to break past. We came up into those levels. All right, and you can see that we started moving back down afterwards. Now, we also have a little bit of range on the bottom that we've been trading in right in this area right here. You know, so for the moment, we're really just consolidating and moving in between these two ranges, zigzagging until ultimately we get a breakout to the upside or we get a breakout to the downside. So it's going to be really interesting to see what plays out. Hopefully you enjoyed this video. If you did, smash that like button, subscribe to the channel, and I'll see you in the next video, okay?